Good morning, everyone. We're going to get started in a minute or two. We're going to allow everyone to join as they're connecting to the Zoom room, and we're going to start in about a minute. We'll let you know that this is actually being recorded, so we will be able to actually upload this and you can share and review. And we are going to be sharing the PowerPoint presentation, so you will be receiving an email with the PowerPoint in hand. I will encourage all of you to introduce yourselves in the chat. Let everyone know who you are, what your business is. If you're looking to scale and grow your business, whatever it is that you want out of this program or this presentation. One thing that I would encourage you to is, if you have any questions, you can ask them in the Q&A, or if you want to actually ask them in the chat, feel free to do so. We've got a lot of content, a lot of information. And the reason why we actually add a lot of information is because we want you to have access to the actual presentation and read it and dissect it at your own pace, because this is an hour of your time that we're actually taking away, but we definitely want to come in and assist and help you as best we can. So let's go ahead and get started. So today we're going to be talking about access to capital, something that's extremely important to everyone. And we can't do this by ourselves. So I actually want you to meet the panelists, and I'm going to give everybody an opportunity to introduce themselves. So Roberto, if you want to go ahead and get us started. And you're on mute, Roberto.
Good morning, everyone. My name is Roberto Castellón. I work with the SBDC at FIU. Mainly, I work in the area of access to capital. I work with clients mostly on SBA loans. I help them not so much complete the forms, because they don't need me for that, but it's more about the interaction with the bank, making sure that the information that they provide to the bank is accurate, selling the client to the bank, which is an important task also. Not all the time does the documentation reflect all the work that the client has put in, etc. I also work with clients in finance in analyzing their financial statements, and then I provide a report after I benchmark them to the industry, where they are doing better than the industry, not as well as the industry, or the same as the industry. And that's quite important for them, because it also includes 3 years of cash flow analysis and working capital needs and so forth. There's a lot of information in that. I've never had a client that didn't thank me greatly for the report, because everyone just learns very much from these reports. Those are the two main areas of my work.
And thank you, Roberto. And we have Mr. Raju Mohandas. And listen, you're getting an actual feel for people across. For those of you that are joining us, you know what? Raju is in Panama, correct, Mr. Mohandas?
Yes, I'm in Panama, correct.
Right. And so go ahead, Mr. Raju, go ahead and you can share.
Yes, hi, good morning, everybody. Yes, I'm also in the work with FIU. I'm one of the consultants at FIU, SBDC at FIU. My area is also access to capital. We do the same. I do very similar what Roberto Castellón does. But in addition to that, I'm a financial management. I work with companies on a long-term basis to get them turned around into profitable and growth entities. It's not only capital that sometimes it's needed, sometimes it's more than just capital. It's actually internal process, procedures, financial management, cash flow situation. So that's where I involve myself a lot more with clients over and above the access to capital segment.
Right. And thank you, Raju. And Orlando Espinosa, I'm actually in Tennessee. I'm not in South Florida. I will be back by this evening. But, you know, with M&L Media, and one of the things that I actually classify myself is pretty much a simplifier of information. The goal is to get business not only started, but growing and scaling. And as a business owner, you need to know and understand a little bit of everything so that you can ensure the success of your business. So today we're going to be talking about access to capital. So one of the key things that we always ask business owners is, before you start looking at capital, we want you to determine your capital needs. Why do you need funding? Why do you need money? What is it that you want? A lot of times business come in and say, well, I just need money to grow my business, or I need money to start my business. But a lot of times business owners don't have a game plan. And one of the things that what we want you to do is to assess where your current business is at, if it has started, if it has actually, if you're stuck, if you're looking to scale and grow, and what do you need funding for? Is it to get started? Is it building facilities? Is it major equipment that you actually want to come in and purchase? Or maybe even lease? Is it office equipment? Is it materials? Is it for marketing? Is it to actually hire? So the overall goal is, as we go and we dive into this presentation, we're going to give you some general information and some specifics. And as usual, you know what, Roberto and Raju, if you want to chime in on anything that we're talking about highlighting, just unmute yourself and I can definitely call on you. But what we want to do is that we want to give you a breakdown. So Roberto.
Well, regarding this area, I was thinking as you were speaking that I have done a lot of work with companies that acquire other companies, and it's actually that always requires projections, and the projections start from the first day, theoretically, that the business will be acquired. But there's a period prior to that day, and those are called project costs. And these are additional monies, and many clients don't even think about it. Additional monies that are needed prior to you acquiring that business. It also applies obviously to startups. So there are really two phases to this thing: the project costs, which you have to lay out, and then starting day one, you do your projections, and that tells you if there's any cash shortfalls that also need to be compensated for. You don't start a business or buy a business and it's making money from day one. It's rare. So there's going to be a period of losses, and those losses need to be included in the loan request. And many people don't think about that.
Right. And thank you for sharing that. And I think that that's one of the key things also, that this is where you, as a business owner, to figure out exactly where you're at and what those specific needs are and what you need to have in order to go after some of this cash. Raju.
Yeah, even though you have this list of capital needs, sometimes it's not going and getting the capital. Sometimes the capital is internal. It's internally available to you, and we'll cover some of that later on in the presentation. But having an outline of what you need, the next question comes, where you're going to get the funds to meet all of that need.
Yeah, and thank you for sharing that, Raju. I think that that's one of the key things, is just determining what that need is, so that now you can actually understand what it is out there and how you actually start raising capital for your business. So one of the things that we're actually going to highlight and talk about is bootstrapping. And I think that for a lot of businesses that are actually getting started, I went in and I put a general overview of what bootstrapping is. And this is where you, as a business owner, need to determine, you know, what is your operating cost? What is it that you're going to do? What type of funding do you actually need for the purpose of going out into your own venture? Now, if you've already started the business, this can actually be applicable as well. But this is where you actually need to come in and understand specifically what your needs are. And this is where you actually start becoming a little bit more proactive, because the goal isn't to just borrow money. We want you to be able to scale and grow and borrow, but we also want you to be mindful of, because when you borrow money, you have to pay it back. And that's extremely important for a lot of business owners. And this is where a lot of them get stuck, because they're not really actually taking into account, you know, what the aspect. There isn't anybody in the corner trying to give you free money. You know what, you may find that within family and friends because they believe in what you're doing. But I think that this is one of the key things that you definitely need to go into, and we're going to dive more into the aspect of the bootstrapping. But this is just a general overview. So, Roberto, if you wanted to share something about the aspect of this, please feel free.
Okay. With today's rising interest environment, I think that businesses want to borrow as little as possible. In other words, borrow only what you need. Had been 2 years ago, I would say borrow as much as you can and just sock it away, you know, put it under your mattress. But today you don't want to do that. And I think that like I spoke before about the analyses that I do of the financial status of the businesses, and every single time I find flaws that tie up cash, too much inventory, very slow in collections, paying too quickly. These are all uses of funds that need to be taken care of. So you may have a business that earns $1 million a year, but they don't have a lot of money in the bank. And once you start digging into the whys, you get some idea of what's going on in there. And if they do that, if this report, for example, this analysis done by anyone, could be done by a CPA, anyone, or the client himself, doesn't have to be us. You realize that you're tying up a lot of capital in your business that you shouldn't be tying up. So now, instead of having to borrow to expand $500,000, perhaps you could do it with $300,000 if you play your cards right. And of course, not going to happen overnight. You have to do it, like say January, and maybe by the end of the year, you start seeing the returns. You start seeing your checking account numbers increase, and that means that you have more capital to put down for that expansion. Again, instead of borrowing $500,000, you only need to borrow $300,000. That's a lot of money that's not necessarily being wasted, but it's just tied up within the business that shouldn't be tied up.
Yeah, and I think that I like the word frugal. You have to be
Yeah.
frugal and understand specifically what is out there, what's available, what is it that you should. And as business owners, you need to come in and be wise enough to understand that what you're doing is the money that you're using, it's somebody else's money. And you have to be mindful of what it is in order to ensure that you borrow what is actually needed and not come in and over borrow, especially in this day and age with interest rates that are actually shifting and changing. So one of the things, Raju, that I know that we had talked about when you look at bootstrapping and what it involves, there's a couple of things here that we wanted actually to highlight and to share. So Mr. Mohandas.
Yeah. Well, bootstrapping and the old saying, cash is king. So you want to be able to hold on, and is more relevant today with the high cost of money to borrow money. So you tend to hire as few people as possible, overload your people and yourself on doing the task. You lease or finance as much as you can. That way you don't have to spend all of that cash initially, outlay that cash initially. And I started my own business as a startup, and we grew in 11, 12 years to be top 100 in the industry. We had to be very creative in extending that dollar and stretching that dollar all the way through. So that is part of bootstrapping. That's part of a startup. That's part of a growing business. So use of money and the uses of capital, like Roberto mentioned, is essential in the process.
Yeah. And I think that that's one of the things that I will share as business owners. I've worked with a lot of business owners, and the one thing that a lot of businesses have gotten themselves stuck is because they haven't created a game plan with what it is that they're borrowing, with what it is that they actually have. And this is where, as a business owner, you have to be very mindful of what it is. Now, for me personally, we went in and we borrowed when the SBA was providing funding by way of the EIDL loan because of the interest rate. We borrowed the money because we knew that we didn't need it, but it was there for the purpose of what we wanted to do moving forward, scaling and growing. What we're saying is for all of you that you need to have a game plan and be mindful of what it is that you're getting done when it comes to taking your business to the next level, because we've seen businesses that have actually closed their doors because they haven't been, good stewards of the funds that they have or what they borrowed. And the goal is not to get yourself in trouble. The goal is for you to grow and scale and understand specifically, if I'm going to provide or get funding for this, this is what I want to do. If I'm going to come in and borrow XYZ, this is what I'm going to do, especially with the shifting and change of a lot of the interest rates and so forth. But this is where I believe that for a lot of you that are entrepreneurs that are looking to start the business, or even scale the business, we want you to be mindful of what it is that you're doing moving forward, so that as business owners, you not only scale and grow your business, but you stay in business for the lifetime of whatever it is that you want to do moving forward. But this is one of the key things that definitely we want to highlight and talk about. So one of the main sources for a lot of startups, when they come in, friends, when they borrow money from friends, from family, and other resources such as savings, credit cards, loans, and investments. And we wanted to give you an idea also for a lot of you that probably when you started, this is how you probably started your business. This is how you actually got some of these funding sources in order to scale and to take your business to get it started. But we're going to actually talk about a couple of other opportunities out there, of what's out there, what's available for a lot of you. The main focus of what we want you to do is to start looking at some financing that there is available for the purpose of startup, because that's something that a lot of people are asking. So you look at banks, there's also finance companies, investment companies. And one thing that I will tell you that we see a lot of right now, there are some grants that are coming out because of everything that happened within COVID, and because things are shifting and changing, especially within the economy and within the workforce. But this is one of the key things as business owners that you can definitely look into to take advantage of and say, well, this is an area that I can actually access. This is an area that I can actually focus on. And this is something that I can actually get some funds to get the business started. Or even for those of you that already had your business started and you're looking to scale and grow, you may want to revisit some of these things, specifically for the industry that you are in, because there are certain aspects to, you know, the federal government that they're looking at, and not only the federal, state and local, they're also looking at businesses that may want to come in and come into their municipalities or come into their cities in order for that economy to be saturated by way of the startups and the businesses that are looking to scale. I don't know, Raju and Robert, Roberto, if you wanted to share anything, so, or can I just go to the next slide?
No, you can go to the next slide. I work 99% with banks, so the others I don't do a lot of work with.
Yeah.
In my case, I do work with the top three, the government grants. I'm not that into it, so.
Right. And that's why I highlighted that, because there are grants out there for some businesses that are getting started, but even for location wise, for a lot of you that are looking to move into a new location, you know, there are some opportunities out there. And we are going to talk about, we do have, Paolo, we do actually have a slide that we're talking about the SBA loans. So we'll go ahead and we'll answer that question for you once we get there. We'll have Roberto answer that. But this is some of the things that you have to look at right now when it comes to the bootstrapping. Once again, we're not going to go through all of these slides. We want you to have this information so that you understand what's what and what you're getting yourself into. But we're going to talk now about equity and debt financing. I think that this is something that's extremely important for a lot of businesses, so that you understand what the difference is and what it is that you can do by way of both. So some of the sources of equity financing, you know, what it is, it's pretty much obtaining, you know, as a source of funding for your business. And what it is you as a business owner, you can actually have equity in that business for the purpose of, you know what, using some of the funds to scale and grow. So Roberto, you're unmuted. So Raju, this is going to be a competition. Whoever unmutes first, I'm going to ask, you know, so Roberto's unmuted.
I'm unmuted. I'm unmuted.
So, you know.
A source, well, one of the sources of funds that I know that it has a bad rap, if you will, because it can get expenses, and you alluded to it in one of your slides, which is factoring. Sometimes, let's say that, for example, the owner doesn't have good credit. You know, you have to have decent credit in order to be able to borrow money for your business. I know it's not a personal loan, it's a business loan, but you know, one of the factors that plays heavily is the FICO score of the particular. Now, if you don't have that, you can always reach out to a factor. They may not care as much, because what they're worried about is the quality of the receivable. Where is their receivable? Who's holding that receivable? And they're going to go ahead and they're going to analyze that company and make the determination at the beginning of whether they want to buy that receivable from you or not. And after you start doing business with them, you have to then tell them, I will be selling $100,000 to ABC company in Kalamazoo. And they're going to say, okay, they're good for it. And you go ahead, or no, we can only do 50. So you got to come to the conclusion. You may want to do 50% to the factor, 50% on your own. But the point is, a factor could be a source of funding for a company that may have a shortfall. And yes, it does get expensive, but sometimes it's worthwhile to pay the extra interest if you really, really, really need that cash for the business. And another point is, and I've encountered this many times, that I tell the client, well, are your receivables domestic? No, they're foreign. Are they insured? No. I tell them, listen, no factor, no one is going to want to finance uninsured foreign receivables. And not just that, if you have a lot of concentration, meaning that you have 3 clients that represent 80% of your sales, if 1 or 2 of those go bad or something political happens in that country, your whole company could come crumbling down. So I know it has nothing to do with loans, but insuring foreign receivables is very important. And a lot of companies do business in this city, in this county, with companies in other countries.
Go ahead,
So-
Raju.
Yeah, so adding to that thing, factoring is one of the major issues, and maybe factoring, he's correct, Roberto's correct, that is one of the more expensive capital that you can get. But with a factoring, you're not personally guaranteeing anything, you're not, and it's a short-term capital loan. And on top of that, it opens up room to maybe even borrow additional capital if there is enough room available in the assets of the company. So yes, even factoring, this is what we call trade financing or capital financing that needs to. But going back to the equity financing, this is where you have to give equity. And a lot of companies want to give their equity away. And if anybody has seen Shark Tanks, they will realize how shocked they can be when they want equity plus interest plus a loan and everything. So sometimes you have to look at the equity, and if you're scaling your company or it's growing fast, equity finances is one of the best form of financing, because you will be limited with debt financing.
Yeah, and I think this is one of the things that I wanted to highlight, the sources of equity financing.
Right.
For a lot of you, and if you want to share anything with what's there that you've discussed and so forth.
Right, like shows up in the wheel. You start with friends and family, then you have private investor partners. Once you get into the venture capital and the bar, after that is it's more complicated, it's more tedious, and you have to really go through a lot of hoops to get to that. Most will be up to the partner side if they ever get up to that level. Okay, private investors, private equity firms and hedge funds, but then you have to be a certain size to ever get to that level of investment, equity investment.
And if the company wants to borrow money down the line, following up on Raju, private investors, for example, don't show up on your balance sheet as a debt. They show up as equity. Whereas if you borrow money, whenever you borrow money, that's going to mess up your balance sheet because your debt to equity is going to be very high. And most banks don't want to deal with debt to equity higher than 3 even. I've seen it as high as 10, but nobody wants to touch a company that has something higher than 3 in general. Right. So private investors show up as equity. So when you present down the road a few years later or a year later, whatever, a loan proposal to a bank, that's going to show up as equity in your company. And so your debt to equity is going to be pretty low. And it's going to help out all the other ratios within your balance sheet. And that's very important to banks because they're going to do all these ratios up and down, all those financial statements.
Yeah, and I think that's one of the key things, moving forward for a lot of you as business owners to understand when it comes specifically to equity. So let's talk about debt financing. I think that's one of the other aspects for a lot of businesses that they're looking at, raising money and so forth. And there's a couple of questions that, right now that let's go ahead and go up. So Raju, there was one specifically for you. And I know that Paolo, you have one about the SBA, but we'll go to that within the slide that we have. But this one, Raju, you can answer, or maybe you can take it offline with Paolo. So the Panama offshore jurisdiction as Panama as a tax haven, transfer U.S. company to Panama for tax, I guess, purposes. Is that a good option? And if you want to take it offline, Raju, you can.
Yeah, well, that's one of the reasons I'm in Panama, because I do have plans that they want to create offshore settings and everything. So there is that there is that option, but it's not a cheap option. It's not a way of divert money. It's not to cheat the U.S. government. You still have to follow some U.S. regulations. Remember, Panama still has an open door policy with the U.S. as far as investment and everything. So it's not just, hey, let's hide the money here and forget about taxes. No, you still have to do within certain rules and regulation. And need to be followed up in that process. So yeah, if you want, you can contact me and we can go over it in more detail, and more, and discussing your needs to
Yeah.
get to that point.
And that's one of the things, Paolo, if you already registered with the SBDC, at FIU, then you're in the system and so forth. And if not, I know that Victoria is going to come in and look at the chat. They'll be sending some information in order for you to register for the purpose of, getting a consultant. Another question that actually came up, Roberto, is can they use their current business to borrow a loan to start a new business?
You could do that. Hopefully the business that you have now has earnings, and that business will likely, well, I'll say 100%, have to be a co-guarantor for the new business. But that usually works when they're also in the same realm or same industry. So if you have a donut shop and you want to open up a heavy equipment rental facility, it gets a little bit complicated, because now it's going to be seen as a brand new type of industry, brand new type of business. They're going to be digging a little bit differently there. However, if it's sort of in the same vein, maybe you want to do vertical integration, for example. So you're still in the same business, but it's just another aspect of the same business that will be easier to do than a brand new industry, totally alien to what the business is doing now.
And,
Yeah.
and to add to that point, it's all going to be based on cash flow to be able to sustain the debt of the current company plus the new debt that you're adding on the new company, and then the
That's correct. They're
projections
going to
and
do a
all of the
global
other
cash flow.
details
That's
that
called
go
global
with it.
cash flow. Yeah.
Yeah.
And by the way, speaking of that, and speaking of that slide that I'm looking at here, sources of debt or capital, in which you're right, Orlando, must be certain the business can generate enough cash flow to repay the loan, which is exactly what Raju's saying.
Right.
But when you do, when there are two types of SBA loans, one is based on historical financials, and one is based on future, which will also be projections. And when you do the projections, and you try to be as realistic as possible, at the end, one of the ratios that goes into those projections, at least I always do it, is the debt service coverage. And debt service coverage, again, regarding exactly what Drew's talking about, is the ratio of available cash against current and future obligations. So the bank is going to want to make sure that the company will be able to repay that debt. The banks are in the business of collecting money, not of taking people's houses. And the debt service coverage plays a major role in that. And then once the consultants work with the client and we ask a million questions, and we finally come up with projections that we think are proper and the client agrees with, if the debt service coverage isn't there, the client should not do the business. Never mind what the bank wants. First is the client. Is it a good idea to do this business? Is it a viable idea? And if it isn't, you should not proceed. Not every single idea, concept is viable or could be. Now you may want to make changes and say, well, okay, it didn't work. It doesn't work because of these reasons. Let's see if we can find ways to fix that situation. But not always can you find an answer to those questions. And many times, unfortunately, I tell clients, don't do it. I'll be honest with you. Don't do it. You're making a mistake. That's my job. My job is not to fulfill people's dreams, but it is, but within reason. And it has to be something that makes sense. Not everything makes sense.
Yeah. And I think it's that reality of understanding you may have a great idea, or you may actually have a business right now that's stuck because you need to modify, because a lot of times businesses don't get started or don't scale because they're stuck in an idea. I know that for me personally, my business, when it started, we were focusing more so on the aspect of marketing and helping businesses market. And then my business had to shift and change. And I focused more on the educational aspect of teaching business owners how to scale and grow, because I actually retained information, and I also simplified information where all business owners tend to overcomplicate things. And I think that, to your point, Roberto, I think that this is where, as business owners, sometimes you just need to talk things through. Being an entrepreneur, and people hear me say this continuously, it's a lonely journey. It's not easy, especially when you're in it by yourself, but having a consultant, from the SBDC, or even actually having other business owners that you can communicate and bounce ideas off of, it's great, because we're living in a society that continues shifting and changing. that what we started doing initially for a lot of businesses during COVID, they started doing one thing and they had to shift and change and be creative. And that's what we're focusing more so on, that creativity. And this is why when it comes to access to capital, we want to make sure that you know what it is that you're getting yourself into. We want to make sure that you understand that you have a clear vision of what's needed and what's the purpose of it, because we want you to continue moving forward. I know that for me as a business owner, it's going to be hard for me to go and work for someone else when I have actually been working and doing the things that I've done for the amount of years that we've had the company. But the goal is to ensure the success of your business by looking at what's out there, what's available. So let's talk about a couple of other aspects of debt financing before we go into the SBA. I know that Roberto, you and Raju had actually tapped into that. But some of the things that we have here, once again, a lot of this is for the purpose of you looking at it and understanding the essence of operating capital. So one of the key things is looking at the aspect of your business. Once again, how much money do you need to actually operate your business? What is it that you actually need to come in and create a game plan? I will tell you that a lot of businesses that organize themselves and have everything in play, you know, this is one of the key things that I've seen the businesses that have actually had an opportunity to scale. Because what we don't want you as business owners is have your hands in everything and be so swamped because, hey, we're making money, which is what we want you to do, but we also want you to scale and grow. So that's one of the key things that we definitely want you as business owners to look into. So listen, you're both are unmuted. So if you want to chime in on anything, that we've got a couple of slides here now on debt financing before we jump into the SBA.
As you're speaking, I'm thinking of a cash flow statement, and the cash flow
Right.
statement is going to give you your net operating, your operating cash flow and your net cash flow.
Right.
And I've seen a number, and I mean a big number of these statements where the company is actually generating profits, but the net cash flow is not there. Again, that's usually because the money is tied up in inventory or tied up in receivables. That's where the money is. That is the time that you want to go ahead and get a credit line. Because I see the one, I don't know, maybe I jumped ahead, but you have sources of debt financing. This is the one that talks about a line of credit. And that's where you determine the amount of the credit that you need. If you have a net cash flow, a negative cash flow of $125,000, guess how much you need? $125,000. That's going to put you back at zero. You always want to borrow a little more. That's going to put you back at zero. But unless you do a cash flow analysis, you're not going to know what the number is, because you don't know where the money is tied up.
And what happens is a lot of small business don't realize or don't consider this in their analysis or need for capital, in the analysis for need of capital. This is where they all fall down. And when they go to the lender, they say, well, I need $200,000, and the lender's looking at it and say, you don't need 200, you need maybe 120 or 125
Or 500.
right, or even more, maybe in the case, you
It
know.
could go either way, yeah.
Yeah, it could go either way, and that's when you have an issue. And then you may not qualify also because a lot of your money is being tied up and you're not doing a good job in financial management on the other
That's
aspect
correct.
of the business. So then you have to kind of find a balance between doing some better financial management and borrowing the balance.
Yeah, and I want to actually answer a question for Angie that she asked. So her business is R&D, research and development, and can I apply to and be awarded both an NSF grant and an SBA loan for my startup? One of the things that you need to look into, Angie, I know that the America Seed Fund, actually powered by the SBA, and it's pretty much the SBIR or the STTR. You can actually look into that because they do give specific grants for the purpose of something that you're bringing to the table that's innovative, something that actually will assist and help you. So take a look at that. And if you need the acronyms, I can actually share that with you.
Yeah,
or you can email me, you know.
I think so.
ahead,
We
Raju.
cover that in the next few slides on that.
Yeah. So that's one of the key things that definitely I wanted to highlight, that we do have that. To talk about that, but if you needed more information, you can definitely reach out to me. But one of the key things that we look at here within debt, and you made mention of that, you know, the line of credit, Roberto, as well. This is an opportunity. A lot of times businesses want more money, you know, or borrow. And sometimes a line of credit will play and help you with scaling and growing. But this is where you actually will take advantage or can take advantage of the opportunities moving forward. So don't overthink this. Look at this as another option. I know people that have actually had lines of credits and they've closed it because they're like, well, I really didn't need it. But did you actually look at your business and make an assessment of where your business was going to be at? And now they want it and now they can't get it.
Yeah, that happened.
Yeah.
I've seen that happen also. I agree with you. And by the way, speaking of lines of credit, you only borrow, a line of credit is needed when you're able to repay, technically speaking, back that money within a year. If you are not able to repay that money within a year because your business is growing, and that every single business that grows needs capital. There's no way around this one, whether you put it in personally or you borrow, it doesn't matter. You need, or you get investors, as Raju said before. So you need cash. But if you're not able to pay it back within a year because your business is growing, then you don't take a credit line because you're just going to be in the same spot a year from now. What you need is a permanent working capital loan, which is an amortizing loan over a period of time, and you pay it back. The line of credit should only be used for short-term purposes. And I see businesses use lines of credit for long-term reasons or for the wrong reasons. And then guess what? They can't, they still owe the $250,000 on the line and they need another $250,000. Well, what you need to do is get a permanent working capital loan, pay off the balance on your line, and put the balance of the money in your bank account. That's what you really should do.
Right.
So a lot of people
got-
making a mistake on credit lines, I think. Business people, of course.
So
Yeah.
what basically you do, you create a balance between a term loan and a long-term loan and a line of credit. And that way you are meeting both of your needs, long-term as well as short-term needs for the capital. And, even some lenders have come to the realization that some of them cannot make that payment or they make the mistake and they give you a different type of permanent loan that it can be repaid in a 4-year period as a line of credit. So there are different products or out there by different banks that you can play with it, and just finding the right product for your situation is key.
It is key, and it's easy to get a credit line only because the bank is only be looking at a repayment of the interest.
Right.
Whereas in a fixed loan, you have to prove repayment of principal and interest. So obviously it's a lot more difficult to get a loan than a line. And sometimes banks just give them out, and people just take them, but you got to be careful about these lines of credit.
Yeah, and I agree. And this is going to be the last section that we're going to talk about debt financing before we go into the actual SBA. And I know that there's a couple of questions focused directly on the SBA and a couple of things that we wanted to highlight. So did either one of you want to actually talk anything about the trade credit, highlight something here?
Well, when I had my business, I can tell you, I grew really fast because of trade credit. My credit, I used to get 60 to 90 days from my vendors, and I would turn the money over in 45 to 60 days. So I was growing on their money. They were giving me, for argument's sake, not really, but for argument's sake, 0 interest. I didn't have to pay interest on that money, even though they had it incorporated into the product that they sold me. But this is the way, a very easy way to grow your business using your vendors' capital, to grow the short-term financing and assist you in their cash flow. So my restriction when I was growing my business and during that period was how fast can I sell or how much I can sell. That was my only concern. So trade financing is a very strong one. If you can, talk to your vendors and see if you can get some extended terms with them.
And the way you did that was because you accelerated, you had a capital cycle that was faster than the repayment cycle.
Right. That's
And
the way
by
you
the
play the
way,
game.
these analyses also produce the capital cycle for a business. You can get all that from the balance sheet and all that.
Yeah, you
So
work
that's
on
how
your
you did it.
working,
You
you
had
work on
free
your
money.
working capital cycle.
Yeah.
It's a free
And I
money.
think that's one of the things. Listen, there's a question I actually want to get to before we get into the, and I'll just change slides now. But someone actually asked a question. How can a new business get a loan without a credit score? And is that possible?
That is the questions I hate to respond to because I don't like when I get asked that question because I don't really have an answer that people like that. So based on my experience, I have not been able to get a loan for a startup. I've never been successful in that, with one exception: franchise.
Right.
Franchises, the SBA has a list of franchises, and if you go, you have to use, there has to be a franchise that's on the SBA accepted list, otherwise it's not going to happen.
Right.
But it avoids a couple of things. It avoids the fear that banks have that the client will not be able to repay the loan, because they feel that if they have the back end of a franchise, they're going to be properly trained. They're going to have all the tools available that anyone needs. It also circumvents another SBA requirement, which is experience in the business. So you get a lot of people who, I don't know, they want to buy a restaurant, and they're accountants. I'll make it up. You know, nobody wants to finance that because they feel you don't have enough experience. One of the ways around it is to actually hire somebody and put that person's resume as part of your package, and that particular person is going to be the one running the business. You can't do that. But if it's a franchise, you don't need to do that, because again, they feel that you're going to be properly trained, and they have a lot of data on the franchises that they have approved. But back to the original question, I have not been able to get funding except for franchises for startup businesses, and that's the honest truth.
To add to Roberto's comment, I was fortunate years ago that I was able to get an SBA financing for a startup, but under the exact condition that you mentioned. Even though it was a separate industry, the owners or the guarantors had a lot of some assets, and they had another business that was going to fund it. Plus, they had the expertise. They hired the expertise to do that loan. So, I mean, to work on the business. So, yes, if you have to have all of those check marks in that list on that checklist,
Yeah, it's
before
difficult.
you can go for a system like that.
Yeah.
Small startup, we can do, equipment loans and everything are possible for startups and everything. But yes, you are going to pay a very high rate or monthly payment to be able to get that startup capital.
Yeah,
I'm
and keep in mind, really quickly, keep in mind, it's not impossible, but keep in mind, that this is where we were talking about earlier. You've got this great idea. You just don't know how to actually, share what the specifics are, or who's the team behind it. And keep in mind, to Roberto's point, if you have, as a lot of you as business owners, or even for those of you that are starting, you had a career before you actually are looking to start a business. You want to be able to use some of those things by way of expertise. That's why they ask you for the elements of the background of who you are, what you've done, and so forth, character, and all of those good things. But keep in mind that lenders want to give you money because that's how they make their money. But they want to make sure that whatever they are actually giving, that they're going to have the return on their investment. And it's not something that's personal. It's just something that definitely you have to have all of your ducks in the row to come in and understand it. And keep in mind that when it comes to borrowing, even with the SBA and the products that they have, if you look at the SBA, this is where you have to be very clear what it is that you have. So you have the SBA, and we actually broke it down here into the microloans, the community advantage small business loan, or the small loan advantage, with the SBA guarantee, and also, the 504. And there was a question there, Roberto, that Paolo asked on the 504 SBA loan finance will expire in 2023. Have you heard anything about that?
I'm unaware of that. That's
Yeah.
not going to be, I can't imagine that's going to be reviewed. I cannot imagine that. I'm sorry.
Well, I don't think so they can do a 504 because it's very specific. It's actually very heavy asset based, either real estate or equipment. So I doubt that they will take a program away where it is very collateral. It has a good solid collateral behind it,
Orlando, I want to make sure that people don't get mad at the SBA. I want to point out that the SBA does not have a problem with startups.
Correct.
The SBA will guarantee startups. That's not the issue. The issue is that the SBA does not lend directly. The SBA lends via banks, and they provide the guarantee to the bank that the recipient of the loan will either pay for it, or a large portion of it will be reimbursed to the bank by the SBA. Unfortunately, banks are banks, and they don't like to take chances, and they feel that the possibilities of a startup going under are very high, and they don't want to run that risk. So it has nothing to do with the SBA. It has to
Right.
do with the banks.
Right,
I just wanna
and
make
keep in
sure
mind,
about
and I'm
that.
glad you said that, because I think that one of the key things is understanding the SBA lent money by way of the EIDL loan because it was a special circumstance in the essence of disaster, okay, because of COVID and so forth. But to Roberto's point, you're correct. This is why when you deal with the banks, when you deal with the lenders, and these are some of the organizations out there, and we'll talk about a couple of those things, but this is the goal. When you sit back and you look at what it is that you want to borrow, this is where you actually have to have the relationship. This is where the role also of the SBDC consultant comes in, that they will find out what is going to be the best avenue for you. And one of the key things that I always tell business owners, get your ducks in a row. You know what, to your point, Casey, you know what, about, obtaining a credit line card and obtaining and creating some credit within your business as a startup. Yes, this is what people want to see also, that you have skin in the game. They want to know that you actually put your own money into the business, that you actually are in it for the long haul, because those are part of it. And that is the essence of a lot of things that lenders look for when they're actually providing you some funding, and that they want to actually assist and help you with. So the goal is making sure that as a business owner, you do everything. I know that for us, when we started, this is what we did. We actually started getting a couple of cards when it came to the business and started building on that. So when we did come in and get ready for borrowing, and we didn't borrow until EIDL, when we borrowed the EIDL loan, because we didn't need the funding before. And that money that we borrowed, it's still there. It's still there in the bank. But this is where you have to come in and be clear on what it is that you want to do, but get all of the steps together and ask questions. Once again, I know Victoria, sent the in the chat the link. If you haven't registered to meet with one of the SBDC consultants, you can definitely do that and have more of your questions answered and take advantage of that. So I don't know if you want to share anything else within this slide. There's a lot.
Orlando,
looking at the time. Go ahead, Raju.
Yeah, Orlando, just to add on what you and Roberto added, is that's the reason banks have a certain limit and they are regulated in a certain way. Other companies like finance and CDFIs and other one have different windows on approving SBA loans. So yes, the approval is always there from the SBA, from the startup. Is the lenders who risk level is what prevents them from doing it. So that's why you have multiple layers or different types of lenders in the whole process. Banks is one of them. And just to keep in perspective that the banks are just one of the many avenues out there to get an SBA loan.
Yeah, and these are some of the other products there. And thank you, Raju, for sharing that, and Roberto. So if you look at this, the SBA, and right here, Angie, where you see the SBIR and STTR that I referenced, okay, this is where the research and development comes in. And once again, there's a lot of information out there. I did share my LinkedIn profile if anybody wants to connect, and we can answer some questions once again, or I can answer questions. Once again, if you haven't registered to meet with one of the SBDC consultants, definitely take advantage of it. But these are some of the other products that the SBA actually has. And one of the things that you look at within the SBDC is a resource partner for the SBA. So as the SBDC comes into Roberto's point, the SBA wants you to borrow money. They want you to scale. They want you to grow. That's why there's so many products and programs out there that they've created. But it's making sure that you, as a business owner, are clear with what it is that your needs are and what you need to take advantage of moving forward. So these are some of the other resources that are out there. And you just need to come in and be clear with what it is that you need for your business. And listen, there's no one that knows your business better than you. And you need to be very clear with what's out there, what's available. We've got a couple more slides.
May I make a comment on this slide?
Huh?
May I make a comment on this slide?
Yes, please, by all means.
All right, I've had a couple of loans that were marginal, but then I realized that the client was exporting. So it fell under the export guarantee. If a client is exporting, the guarantee from the SBA is 90% of the loan. So when you have a margin, cannot be a bad loan, but if you have a marginal loan that any little bit will turn into a loan itself. International trade is very, very important. I believe that the threshold is 10% or more of your sales have to be going to foreign countries. And that qualifies you qualifies the loan for a 90% guarantee, which makes banks really want to make that particular loan. I've had at least 3 of those that have worked out that way.
Yeah, and keep in mind that this is where it comes in to talk to someone that's actually going to assist and help you. The other aspect of financing alternatives, we've got the person-to-person, financing, and we've got the business-to-business financing. So I don't know if either one of you wanted to highlight this before we dive into the crowdfunding.
Well, I think so. We did some presentations in the past where we were Orlando, where we were really going, trying to establish these types of financing and crowdfunding in the past. It's still there, is still available. Yes, the rules have changed, baselines have changed on it, and there are new regulations, but it is an alternative financing still available for a lot of small business who are not able to go to regular channels of financing.
Yeah, and this is just something that we have there. Once again, as I said at the beginning of the presentation, we added a lot of content so that you can actually look at this once you receive the email of the presentation, that you can come in and say, okay, well, let me research a little bit more into this. We're going to go into the crowdfunding section of it because I am being mindful of the time. So pretty much what crowdfunding does, it actually connects you with like-minded people for the purpose of scaling and growing. So we're going to go ahead and highlight a couple of things here. And this is some content there, for the purpose of you understanding the essence of crowdfunding. And then moving forward. Okay, so these are actually some of the sites that are out there. And what we did was that we went in and we just listed some that were available that you can look at. And I'm sure that some of you have seen some of the GoFundMe accounts and the Kickstarters and all that. But if you look at some of the numbers that are there, we wanted to highlight that so that you can see moving forward what was going to be what's out there, what's available, and what you can actually access. And yes, Lorena, you will have access in the PowerPoint that's being emailed. You'll have our email addresses, and I know that Victoria also actually added a link where you can actually register if you have not signed up for SBDC Consulting. But if you look at the aspect of crowdfunding, we've done crowdfunding in the past. We work with clients that actually are looking at crowdfunding to raise capital, but this is something that you have to be very specific and know. And even creating a crowdfunding is not going to guarantee that you're going to get money if you aren't creating an actual game plan of when is it that you're going to actually create this? When are you going to launch it? Are you getting people excited with what it is that you're doing? And even with the crowdfunding aspect of it, you have to tie it together to an entire marketing plan to create where are you going to share this, who's going to share it, and how can you make it go viral for the purpose of raising funds and raising capital. So anything that either one of you want to share on this slide specifically. And like I said, we added the content on the right hand so that you can see what entails each and every one of these platforms. And things are changing. And I've seen people that have actually been able to gather funds and actually get some startup money for the purpose of this with what it is that they're doing. Any thoughts, either one of you, or we can go moving forward? All right, so let's go to the next one. And I think this is one of the key things, the CDFI. So here we have the Community Development Financial Institutions. I know that there's quite a few in South Florida, but if you want to highlight some of the things and what is a CDFI? What does that entail, Mr. Mohandas? I saw you get ready to speak.
Well, I've been working with CDFI for over 5 years now, and obviously I've come to know them very well. There are 2 major ones here in Miami. Actually 3, but the 2 that I tend to work with is Miami Bayside Foundation and the Community Fund from Opaloka. Those are the 2 that I've worked with. I think so. Ascendus is a 3rd one, also a CDFI. And basically, the way I position CDFI is somewhere between you're starting your business, you're outgrowing your business, but you're not yet to the level of the banks. The banks are not there to do. So that's your step in between to get to the lenders or the top lenders. So it is a step up to the original getting to the banks. They are much more open to credit issues in your personal credit, in the business. So they, their window of approval is wider, but they also have limitations as far as how much funds they can give you. They cannot give you a large amount of money. They do the same analysis as regular banks, but they are more holistic in their review of the financials and projections of the business. So the goal of them is to create community development, to grow the communities in the area. So they are a little bit more flexible in that respect. That's just to give you a quick overview of how CDI works.
Yeah, and I think that to Raju's point, and I think that even with what Roberto has said, a lot of this is based on relationships. A lot of this is letting people know who you are, what you do. I know that years ago, when I was a volunteer for SCORE, we used to put together workshops, Raju and I, and one of the things that we saw a lot of businesses come in and sit in a webinar or a workshop. Actually, there was one that we focus on simple steps to start your business. And I remember Panther Coffee sitting there and being one of those actual businesses before they got started as a startup, but listening to the essence of what was out there, what was available. And I think for a lot of you, the goal is making sure that you take advantage of what is it that you're doing moving forward. So when you look at relationships, they matter, but you need to talk to, there's special programs out there that you can actually access. Yes, Lorena. So the actual CDFI, you do have the CDFI of North Miami-Dade, and that's what it's called, Community Fund of North Miami-Dade. We work there closely with Marcela. Right. It's all about opportunities out there that you want to take advantage of with what's out there. One thing that I will share also is, one of the key things is, before you borrow, you know what, get a game plan and ask yourself, when will I need capital? Do you need capital now? I have always heard that you look for capital when you don't need it. When it's available, get it so that at least you have it. Yeah. What type of capital will I need, and what amount do I need, and for what? This is where you actually have to have a clear game plan moving forward with what it is that you want to do. And because, once again, the purpose of why we do these webinars and the workshops that we do is to come in and give you information so that you can continue to scale and grow and take your business to the next level, or even start your business. But don't overthink it. And I know there were a couple of questions, but I'm looking at the time. So, all right. So if you have questions, definitely you can reach out to us. In the email, you're actually going to have our email addresses. I know some of you are already connecting with us on LinkedIn, but any final thoughts, any words of encouragement, Roberto, that you can give Raju, and then I'll close out.
Well, I want to answer a question that hasn't been asked, because somebody may be thinking about it. And that question is, exactly what percentage will the SBA finance of whether it's equipment, working capital, real estate? The answer is 90%. Borrower has to come in with 10%. So if you locate a warehouse you want $3.5 million, you come in with $350,000, and we can get the financing for the balance of that. Of course, as long as all the requirements are fulfilled for the particular loan by the business. And that's what we've been talking about this last hour, right? The game plan, the situation of the business, what are the needs of the business, what are the successes of the business, that they borrow money before. I mean, all these are elements that go into a loan. It's not just one single element that goes into a loan. It's multiple elements that go into a loan. Do they have collateral? Do they own a house? That's important to the bank, not the SBA. And so forth. But the answer is 90%, which is extremely, extremely favorable. No way a conventional loan at a bank would finance 90% of anything.
Right. And thank you for sharing that. Raju.
Well, the only way I can say this, there are over 6,000 banks in the US. And if you add the finance companies and the other companies, we have maybe about 10,000 different entities that can lend money. Now, the reality is none of them have all the same rules. They all have different criteria to approve a loan. So to give you an example, if you have everything done more or less, and even if you do get rejected by 1 or 2 or 3, you still have about 10,000 to go through before you get a loan approved. Somebody will buy your loan. I had done that. I've gone through it. I've gone through one where number 11 approved the loan, 10 of them rejected for a very, very good business. But 10 rejected, number 11 said yes. So it is persistency. You have to be resilient in going through the loans. You must have all your numbers. You must have all of your ducks on the roll, check mark everything, and use the SBDC services to help you navigate all of these different ways, access to capital issues.
Yeah, and one thing that in closing, I will share with a lot of you, it's, listen, banks want to lend you money. The SBA wants you to grow and scale, as a guarantor. But the one thing that you have to look at within your business is simplify everything that you've done, look at it specifically, create a game plan, and don't be afraid to put your best foot forward with what it is that you've done by way of your experience, by way of what you offer and bring to the table, but start building relationships. And to Ranju's point, you know what, if someone says no the first time, that doesn't mean that it can't be approved. It just means that you need to take advantage of other aspects of it. What you as a business owner has to do is stay motivated and encourage, because someone will say no, but the other person may say yes, because you align yourself with them because of the goals and what it is that you have within your business. Now, we didn't come in and dive into all of the other aspects of what it takes to actually get ready for the purpose of borrowing. And we'll do that at a later date. What we wanted to focus on today was to give you a better understanding of access to capital and what was out there and what's available. Once again, listen, thank you. We will see you on the other side. We've got some great workshops that we're putting together for next year. So definitely we want to highlight some of those things moving forward, and hope you enjoy the holidays. Those of you that are in pumpkin spice mode, and those of you that are in the candy corn mode. So enjoy yourself, and we'll see you at another interval. And thank you so much.